As a real estate agent, I often get asked, Gabby, how much does it cost to buy a home? While your mortgage loan officer is the one who's going to ultimately pre-approve you by gathering all of your documentations, running your credit, and suggesting loan programs that best fit your needs, in this video, I will give you a general idea of just how much you need in order to buy a home. My goal is that by the end of this video, you have a better understanding of what you actually need in order to get a pre-approval for a mortgage, start house shopping, and actually buy your first home. This video is perfect if you are someone who is not ready to go talk to a lender as of yet right now and would like to start house shopping tomorrow. This is the perfect video for you if you just want to start educating yourself and start gathering information so that you can better prepare and get you to obtain your goal of buying a home. And if you don't know already, my name is Gabby Magsino. I'm a real estate broker in New Jersey, and I'm here to educate, empower, and inspire people to make informed real estate decisions when it comes to buying and selling a home in the New Jersey suburbs. If that sounds like something you'd like to learn more of, then don't forget to hit the subscribe button and click the thumbs up if you like what you hear. To start, the cost of buying a home will vary greatly depending on a few factors, which includes the price of the home, the loan program that you're going to use, the current interest rates, property taxes, home insurance, and if you're looking to buy in a community such as a condo and a townhome, then homeowner association fees, your inspection fees, and any additional closing costs that you need to pay for in order to close. And don't forget that you also have to allot for moving expenses, furniture, and any repairs that you'd like to do in the home prior to moving in. So in this video, I'm going to be going over in detail all of those different factors and also the 4 key requirements that the bank look for in order to determine your affordability. And keep watching till the end because I'm going to do a breakdown of exactly how much you need basing on a theoretical price point of a home that you are buying today. As I mentioned before, there are a few key factors that you need to watch out for in order to calculate exactly how much you need to buy a home. And the most important one is the price of the home that you are buying. The price of the home will be determined based on the location, how many bedrooms, bathrooms, condition of the home, and what's currently happening in the local market. So what you can start doing right now, even if you're not ready to go shopping just yet, is to start looking at how much are homes going for in the location that you would like to buy it. You can go through Zillow, Realtor.com, Homes.com, but you could also ask your real estate agent to start sending you automatic emails so that every time a new home pops up that is in your criteria, you will get an automatic email or list alerts. You'll be able to see exactly how much homes are going for in that particular market. I like to do this for a lot of my buyers, especially after our first initial consultation, because it gives them a general idea of how much homes are actually getting listed based on the criteria that they told me. The amount of money that you will need to buy a home will also be based on the loan program that you would like to use to buy this property. I'll go over the popular loan programs that people use, but truthfully, there's a lot of loan options that are available for different types of buyers. So if after you watch this video through, you realize that you just don't meet those criteria, feel free to schedule an initial consultation with me so that we can find out if it's possible for you to buy a home. But like I said, I'm going to be going over the popular loan programs that majority of buyers use in order to buy their home. Most buyers nowadays tend to use a 30-year fixed mortgage loan programs, which essentially means that for 30 years, your interest rate will be fixed and it will not fluctuate based on what's going on the market. And the most popular loan programs that a lot of buyers use to buy a home is conventional loans, FHA, VA, and USDA loans. Conventional loans would be the most popular loan type, and with that, if you're a first-time home buyer, you may be able to put down as low as 3% of the purchase price, but most of the time you would need at least 5%. One of the great things about conventional loans is that if you put 20% down or more, you won't have to pay PMI. But also, if you're going to be putting less than 20%, once your loan to value ratio of your house is 80-20, meaning the mortgage that you hold in your current house versus the value of your home is 80% or less, then you could also remove that monthly PMI. So if you know anyone who bought a home in 2020, 2021, or earlier, they may be eligible to remove their PMI because values of homes have appreciated significantly and almost doubled in value. And all you have to do is contact contact your real estate agent who helped you buy the house. Ask them to give you an evaluation of how much your house is worth today. If you and your real estate agent find out that your loan to value ratios is now 80-20 or less, then you can go call your bank and let them know you would like to remove your PMI. Another popular loan program is the FHA loan, and this is most especially popular for a lot of first-time home buyers. One of the great things with FHA loans is that they are more lenient when it comes to approving buyers. They're more lenient when it comes to credit scores, debt to income ratios, and you can put down as low as 3.5% of the purchase price. So this product allows a lot of people to be approved for a mortgage, and that is why this is a very popular loan. The one downside when it comes to FHA loans, however, is it doesn't matter if you put 20% down or if your loan to value is now 80-20 or less. With your home, you will never be able to remove your PMI. If this program allows you to be pre-approved and buy your first home, then paying PMI is not the worst thing in the world. Another popular loan, if you're a veteran, is the VA loan. The VA loan is actually a very great loan product. So if you're a veteran, then listen closely, because with this loan product, you'll be able to buy a home with 0% down, and they have really great mortgage interest rates and just overall a great program for you. Another loan program is the USDA loan. So this is actually a 0% down as well. This loan program is only available for locations that are USDA approved. The number 3 factor is also important because it will determine just how much you have to pay for borrowing money to buy your home, and that is interest rates. That is very hard to control because it really varies depending on the market, especially in this market that we're in right now. It's very volatile. The only thing that you can control in this situation is if you have a higher credit score, then you will be eligible to receive the best interest rates out there versus someone who don't have the best credit score. And number 4, property taxes is huge. This makes a huge difference when it comes to your monthly mortgage payment. So for example, if you're buying a home that has property taxes of $12,000 per year versus buying a home that has property taxes of $6,000 per year, with a home with the $12,000 per year property taxes, just in property taxes, you have to pay $1,000 a month versus the other home that has $6,000 property taxes, you would only have to pay $500 a month. That is a significant difference, and based on the location and the town that you're buying in, especially in New Jersey, taxes can vary differently. And number 5 is home insurance. Generally speaking, home insurance prices are similar, but of course you could still get estimates from different companies so that you can shop around and make sure you're getting the best price for your home insurance. If you're looking at condos and townhomes that are in a community, you might also have to pay different fees for the homeowners association, and you would also have additional monthly payments added to your mortgage for maintaining the community and for any amenities that that community provides all of their association members. The rest are other fees that you have to watch out for when you're buying a home, and that includes inspection fees, closing costs, moving expenses, and any repairs that you'd like to do to the home before you move in. Usually buyers will do a general home inspection, termite inspection, and a radon test. That is usually around $600 to $700. And depending on what else your home has, you may have to have additional inspection. For example, if you have a pool, you need to have a pool inspector. If it's public sewer, I usually try to advise my clients to do a sewer scope. If you have a septic, then you have to get a septic inspection. So inspection fees can definitely add up, but at the bare minimum, I would allot maybe about $1,000 for inspections alone. And then you have your regular typical closing costs, and that usually ranges from 3 to 5%. For buyers, your closing costs will include certain fees such as your attorney fees, title insurance fees, lender fees, and any credits and debits that the seller and the buyer has to balance out for any fees that the sellers have already paid for, and vice versa. And lastly, while this is not something that you have to bring at the closing table when you buy the house, it's still something that you have to definitely think about, which is moving expenses, any repairs that you want to do in order to update the home, and the cost of any furniture you have to buy in order to make it your own. And that's it. I wish there was a simple answer to this question, how much does it cost to buy a house? But it's really a little bit more complicated. And I hope that going over the factors that will determine how much you need to buy a house really helps you get a better idea so that you can prepare when you're ready to buy your home. Now that you know all the factors that will determine how much it would cost you to buy a house, it is also important for you to note that outside of how much you need to buy a house, there are also more requirements that you have to prove in order to get a pre-approval for a mortgage. And aside from your savings and any assets that you have in order to pay for down payment and closing costs, the bank will also want to make sure that you have great credit history, that you have income coming in, and they will also want to look at all of your debt and expenses. As a general rule of thumb, you want to have at least a 720 credit score in order to get the best rate. When it comes to your income, your loan officer will ask you for documentation such as pay stubs, W-2s, 1099s. For the most part, they really want to look for at least 2 years of work history, which you can prove by giving them your tax returns. And lastly, once they run your credit, they should also be able to find out about your monthly debt obligations. And that's it. And as promised, I'm going to do a quick breakdown based on a theoretical scenario of you buying a home in Somerset County. So let's say you're looking to buy a 3-bedroom, 2-bathroom house in Bridgewater, New Jersey. So as of May 2024, the average price point in Bridgewater, New Jersey is $640,000. So let's say you're buying a $640,000 in Bridgewater, New Jersey, and you are going to be using a conventional 30-year fixed loan. Then to calculate how much it will cost you to buy this house, at a minimum, 5% of $640,000 is $32,000 plus inspections. So let's say this is a fairly nicer home and you need to also get a chimney level 2 inspection and a pool inspection. Let's say that you will have to spend about $1,500 to get this home inspected. Let's add in $1,500. That's $33,500 plus closing costs that you will have to pay for, including your attorney fees, title insurance fees, lender fees, and any prorations that has to be credited and debited between the seller and yourself, which is the buyer. So let's say you want a lot for at least 3 to 5%. 3% of $640,000 is $19,200. So $19,200 plus $32,000 plus $1,500 is about $52,700. So you're looking at least this much money in order to prepare you to buy your first home at a $640,000 price point. And again, this is assuming that you are pre-approved for a mortgage of $640,000. And that's it for me today. I hope that gave you a better idea of how much you need in order to buy a home in New Jersey. If you like what you hear, please don't forget to hit the subscribe button, click the thumbs up, and tune in for my next video next week. Bye.